So, um, we've been asked about mapping things like gold and indices and Bitcoin and whatever else. There's ways of doing it with a pip pullback method. If you want to sit and figure out what kind of pip pullback works for your pair, you're more than welcome to. If you spent a couple hours testing it, you definitely can. What I found is with the daily and the 4 hour trend, structure's quite simple and apparent. And most of the time, it really trends in one direction quite a bit. So we can maybe even, let's see, that's 2011, maybe a little far back. Why don't we just map a little bit of gold and I'll just kind of show you how I do it. Like, I pretty much eyeball it. The daily to me, so for me, I don't really look for a tiny pullbacks. I look for pretty big pullbacks when it comes to daily or 4 hour. So that would be a break to me. This becomes a low. This is the highest point before the break. So this is structure. So now for gold to become bullish on the daily, this high has to go. Once this high is gone, for me, this is likely, let's see, how many pips is this actually? Just to get an idea. And again, you don't need to, but what we got here, that's that's kind of borderline. You could call this structure. You don't have to. I'm gonna call it structure just because for the sake of this video. Um, Again, this is kind of questionable, might be enough, might not be. Do you want to map its structure or not? That's totally up to you. This is likely more 4 hour structure than anything. So I would likely just map this and this. There would obviously be a lot more structure here on the 4 hour. But as far as going with the daily mapping, I don't really need a lot. If you want to find something that works for you number wise, like again, you can figure it out. But like I said, this is likely, could say this is enough of a pullback. I'd likely map this. So here you turn bearish momentarily, unconfirmed. And with stuff like the daily and the 4 hour, you can literally eyeball it. If you need more than just eyeballing, you can use the uh, 5 candle swing pivot method that Brian teaches in the extra section. It may help you a lot. Totally up to you how you want to map it. These pullbacks are kind of, again, questionable. They're pretty small, but you can map them. So with that in mind, I wouldn't have another structure point until here on the daily. There's likely a lot of 4 hour structure in here. Understand that daily structure is not meant to change often. So this whole time, 4 hour likely turned bearish in this area. You can see the daily time frame has not. So to me, this is basically bullish on the daily and the weekly, and the 4 hour is obviously bearish right now. So that's kind of how, as far as my structure would go. Nothing else really broke these points. That's all I'd look at in terms of daily. You can see we kept it pretty simple. Now, if we looked at the 4 hour, my eyeballing would get a little more intense and you would get a little more points. So here we had our daily structure, I think only appears on the daily. So if I looked at this on the 4 hour, there would likely be multiple structure points. So this would be a structure point. So to me, high and a low. Likely say this is enough. You got a break here. I would say this is a break, lowest point. I probably wouldn't classify any of that as a pullback until here and here. And your next structure point would be where your daily high is. So now my 4 hour is bullish until I get a break here. So for the most part, when we're talking 4 hour and daily, structure's not hard to map. Where what people really had trouble with is the 15-minute because it changes so often, and people had trouble with that. And it's one of the other reasons we got rid of it. You do not need it whatsoever. So now 4 hour turn bearish here, for 4 hour to turn bullish again. This high has to go. Whatever your method is for mapping, just keep using it. Like for me, like I said, I use the pip pullback method on forex pairs. Anything that's not a forex pair, I just eyeball. Like I said, 4 hour and daily structure doesn't change enough that I'm really concerned about changing structure all the time. Did we take this high? So now if we take this high, this would be a 4 hour trend change. We did not take that high yet. We do take this low, however, so the 4 hour bearish trend continues. Now we only got a candle wick here, no body, so this is not a break to me. The break occurs here. Let's see, what are we at? 719, 759. I would likely classify this as pullback. I'm gonna break here, break here. Cool. So in some areas you'll get more structure than others, and that's totally fine. So my high would be right here before the break. To me, none of this would be structure. I know that I am bearish on the 4 hour, and we likely hit a higher time frame supply in here, and we're getting a retracement. This retracement made almost a complete retracement, felt this imbalance, and continued on down. And we'll talk about that in the imbalance section. So now we're bearish for structure to change over to bullish. I need two highs. So here we make one high. So we are now on confirmed bullish. And you just became confirmed bullish once you have two highs. Here we get a break. And this is the reality of the market. You will get structure like this. It's not the cleanest, and it happens. So here we become unconfirmed bearish once again. The trend never gets to get confirmed as bearish. So here we come back, and this is actually, again, a confirmed bullish trend because we never actually made two lows to become a confirmed bearish trend. Because this was a confirmed bullish trend and we only made one low, this to me would be now a confirmed bullish trend, as it never, as 1 point truly doesn't break a trend to me. It's sometimes a liquidity grab or a run on inducement. So with that in mind, we are just looking at continuing the confirmed trend. So with the 4 hour and the daily, it's pretty forgiving. We don't need a lot of laws to guide us in the sense of what you consider structure. If you need set laws, you can make those yourself. Just a lot of different ways of doing it, but for the most part, it's not hard to identify the hard time frame trend. And like we were talking about in the previous market structure video, structure continues one direction for a long time. So you can see here we were bearish for what, 3 months. Now we're going to be 4 hour bullish from March to May. So we're bullish for 2 months. Like 4 hour and daily trend just does not change that often. You have to think of how much money it costs the banks to change these trends. So when they change a trend, they want it to go that way for a bit. Otherwise, it's not worth it for them. They don't day trade. They hold for weeks, months, years. This to me would definitely be a high. I don't actually know if I take that as a pullback a little bit. Let's see, what is that? 1890 and 1861, 300 pips. Yeah, that's, I guess we can count that as pullback. I don't love that as structure, but I guess 4 hours not that, it's not daily, so we'll count it as structure again. And here we get a massive reaction, likely off a daily or a weekly supply zone. And now we're changing direction the other way. And now we're unconfirmed bearish. And we just became confirmed bearish. And this pullback's likely sufficient. So to me, this is all a bearish trend. So all of June was bearish. July looks like it was turned bullish again on us. Now, something I want you to pay attention to is look how aggressive the bearish price is and look how corrective the bullishness is. Usually when you see it kind of moving sideways and having trouble going higher with any aggression, it's a temporary trend. There's no real authority behind it. And the temporary trends never really last. Like, obviously you bought for a month, but I'm just saying it wouldn't be like an all of 2022 trend. Whereas if it was showing aggression like that the whole time, that's a lot of authority behind that. But anytime you get corrective stuff like this, it usually gets run and used for liquidity. So for me, this would be the high. This would be your lowest point. Oops. High, lowest point. And you don't have any more highs taken. The low gets taken here. So now we're confirmed bullish. This is the highest point before the break. And I would say you're unconfirmed bearish. You do not have a trend change unless this high goes. And right now, you actually momentarily turn. Let's see what we got here. 68, 200 some pips. It's probably a valid pullback. But you could see how we didn't really get too intense with anything. So there's no candle break until here, which would make this my high, this my low. Again, we got no candle body here. This is a wick, meaning that it's not a break. Here we have a break. We turn unconfirmed bullish again, and we carry on. Now we don't have a break of a low here, so this remains a bullish trend. Again, we just got a wick here. So now if we look here, you have a low here, or a high here, I should say. Now, this being our, well, we did actually get a, my bad. Let's actually examine that a bit. So if this was our point, we actually momentarily turned unconfirmed bearish. The trend quickly changed again here. Now, this is kind of questionable. You may consider these 2 points a pullback. You may not. Completely up to you. I'm just going to leave it as is. There's no break here, so you don't have any more structure until this gets broken. But again, back to our theory of trend really doesn't change that often. And now we're going on months of bullishness. And you guys can kind of see it just carries on bullish for another month and a bit. And then it turns bearish in March, and we're into September, and it pretty much has been in the same bearish trend. So that's as simple as I keep the 4 hour and the daily structure mapping. If you're ever confused and unsure, squish your chart together and just put a line on stuff. You know, you don't need to trade trend lines, but you can kind of see what direction the lines are going. And it's a pretty good guideline of what the market's doing. So, bearish, bullish. This is something that can just basically help you if you're having trouble mapping. Again, bearish. You could say you got short-term bullishness here, but it could kind of give you an idea if you're mapping your structure right. But if you squish it together, whoops. If you squish it together or go on the daily, you can have a pretty good idea of what trend is doing. So this can really alleviate trying to go counter and 4-hour trend too much and just try to take higher probability setups in line with them. And if you're not in line with them, then you're counter those higher time frame trends. You are aware that that trend is likely to end soon, and pricing can really help guide that. So that's about all for market structure. Nothing new. If anything, we've simplified it, and our data really backs this. So I hope this video helps you guys, and I will see you in the next video.